Welcome to the Spirited Agent Podcast. We're pouring wisdom and sipping success one episode at a time. The Spirited Agent was created to empower agents to navigate the ever-evolving world of insurance and grow their business. Grab your glass and let's get inspired to protect your clients from the unknown. Here's your hosts, Millennium Brokerage Group Legacy Planning Executives Jason Combs and Matt Zelenik.
Hey everyone, and welcome back to the Spirited Agent Podcast. Today we're joined by a special guest, Bill Zelenik. He's the founder and CEO of Millennium Brokerage Group, who also happens to be my father. So this should be interesting. Welcome, Bill.
Thanks for the introduction, man.
No
I appreciate it.
Any comments on the father comment? Like it was a pleasure working with me, son, all that?
Oh, yeah. Well, it's been a pleasure and a pain. So, you know,
no doubt,
typical dad-child thing.
Yeah.
Mostly a pleasure.
So Bill's drink of choice is an Irish whiskey, Redbreast. So today we have Redbreast Cask Strength here with us. It was originally bottled by Gilbey's in London, which they also had a factory in Dublin that sourced the distillate of this from Jameson. So Redbreast brand first came out in 1912. Not a whole lot of history on it up until then, but in 1985, Gilbey's sold the brand off to Irish distillers. And then in 91, it was reintroduced under the same label of Redbreast. And it's been that to this day. I don't know a whole lot about Irish whiskey or what to even taste here, guys. So I'm going into this a little blind.
Interesting choice.
If you know any tasting notes on this, feel free to share.
Well, I don't know the tasting notes. I would tell you that the regular Jameson anyway, which is a little milder than this, is a whiskey I would consider that you can drink at a lot of different times. It's kind of a easygoing type of a whiskey. Falls somewhere in between a bourbon and a scotch. I would say.
Yeah.
I
can see that.
Very nice.
Fun.
Yeah.
It's pretty good.
So, Bill, tell us just a little bit. I guess this is what, the 26th year that
it
Millennium?
is. Yep. Yeah. I had worked at Aetna for about 16 years, pretty much from the time I got out of college. Company was being run, and it was a big company at that point. I mean, one of the biggest in the country, being continually run by less than good performance by the CEOs. And in the mid to late 90s, they began to sell off different divisions. I mean, it was a big property and casualty company. It was a big life and health company, retirement, everything. So the part that I did distribution in was actually part of the life insurance and retirement company, and they sold that to Lincoln National. It initially looked like a good scenario, but the way they handled the sale, they actually did a lot of us out of all of our unvested stock options. And so I was going to go out on my own. And so that's when the lady that was kind of my office manager here in the Southeast decided to go with me, and a young guy out of Knoxville who worked for me, Bob Williams. And we opened the doors of Millennium later that year. I laugh. I think I'm the only person who never got a severance package from Aetna because I had a good job offered to me, so I was actually quitting. But it turned out really well. Aetna continued to mess up. I was able to bring over about 14 or 15 of the people who either worked with me or for me. And Millennium grew pretty quickly. We actually sold 60% of Millennium in the end of 2005 to a publicly traded bank in St. Louis, Enterprise Bank and Trust. One of my current partners here, it was CEO of the trust company, and we were supposed to grow it within the bank, and then 07 hit, and late 06, all the troubles. And so the FDIC told the bank they couldn't put any more money into Millennium, so we couldn't get the back end of our payout. So in 08, ended up buying it back. Paul, at that point, left with me. He left the trust company, and we rekindled Millennium. It's run since then. I'd like to see it continue for employees and other people and run for 100 years. We have no desire to sell the company. It's actually been, I guess, kind of a labor of love. I've enjoyed it, so I don't feel like a lot of the work has been that terrible. So that's the history I would give you of Millennium. And I think we have tried to be employee and customer focused in handling this company.
You've done a lot of work with property and casualty insurance agents. That's kind of the heritage of the place, right?
Pretty much 85% of the business when I was running distribution here in the Southeast was from property and casualty agencies.
Yeah.
That's correct.
That's a thing that we continue to focus on here. Where do you see kind of the marketplace? You know, obviously life insurance is, you know, you see some ups and you see some downs. You know, there's a lot of things going on in the marketplace. What are some of those trends that you see right now that people may want to focus in a little bit on?
Every industry has been affected by technology. Unfortunately, I would say that in our industry, the companies have benefited substantially more from technology than the distributors have. And what I mean by that is technology has allowed them to push things out to us to do easily. In our world, it's actually become a little bit more expensive and a little bit more work to generate your business. And for them, it's become less people intensive, both in underwriting, administration, and other things. So I think the companies, first and foremost, have benefited from technology. The other thing that's done is that when we were doing this and I was running the distribution piece, products came out in anywhere from 2.5 years to 3. Okay. So if you built a new product and it was good and it gave you an advantage, first of all, it gave you an advantage for a while because people couldn't catch up with it as quickly. Plus, it gave agents and us a little bit more time to work on different things. Now you're seeing companies basically run new products out every 6 to 9 months.
Right.
You'll see just a minor change in a product, like some of the products that do indices, indexed life insurance. A minor change that really doesn't make that much difference, but yet the cap rate and the amount of money that the new guy who bought it just right now gets versus the guy who basically bought the same product 9 months ago gets are different.
Right.
And I think that's a real issue for our industry, in that I think to the customer, it's like next man up. What's the best product? Keep moving. And then it's an issue for our wholesalers and our agents in that new products are coming out so fast, it's really almost impossible to keep up with exactly what's the best thing. You really have an environment in which the distribution side of it has a lot of issues to deal with. We represent probably 20 companies. And if you look at 20 companies and they're changing products every 6 to 9 months, that means in 2 or 3 years, we may see 45 to 60 different adjustments in products.
Right. Mm-hmm.
And so I think for our wholesalers and our people, it's actually a little bit more difficult in that respect than it was 10, 15 years ago.
Right.
But I think something else that's done that's made it harder on the agents and the wholesalers is kind of this. Harry Truman once said about how do you give people advice? How you give people advice is to find out what they want and then you tell them how to do it. That's more of what we were able to do in the late 90s and early 2000s than we are now, because we react to information. It's a natural thing that happens. And so much information comes out about product. Instead of going to that property and casualty agent and say, what do you need? What are you trying to do with your business? How can we help you grow your business? Which then allows us to do that. If we're working with them, now we're dealing with, Corebridge's new product, Nationwide's new product. And it becomes a discussion which becomes more about what's getting paid, what looks best on an illustration, than really what can we do for them and what can they do for their customers. And I think that's been a big negative.
Sure. What I kind of hear you saying is get back to your basics, and let's just talk about basic building your business, growing your revenue, helping your customers, and really understanding, the customers that an agent does serve and how we can implement a strategy to help them.
I do think we need to simplify it about what do people need, a good explanation, how can we help them get it? And that's how you end up with more long-term clients and better agencies that we work with. Because if you make it just about product and everything else, then the next thing you make it about is commission. That gets into pricing, and pretty soon everybody's just, it's unrelated to us. Sure. And then you have to throw in the fact, I think, that we do have to go back to basics, because if you look at the statistics for the industry, even though they would like to have it where you could open up your computer, start to type in, decide how much insurance you want, hit a button, get underwritten, and get a policy, that's just not working.
It's not happening.
Yeah.
So it's still is a product. It's not like, buying this mic. If I wanted to buy a mic, I could go look at a store, find a really good mic, and then go to Amazon and see if they sell it cheaper, right?
Right.
Order it. That's not the case in our industry. We actually have what I would call an out of balance. We have the companies trying to be in that type of an environment, and us really having to deal with the fact that insurance isn't bought, it's sold. Mm-hmm. And that's not easy because we're not being supported in that in much at all. You support our people. I support our people. Matt supports our people. But the companies really don't support that heavily.
Yeah. So if you're out there and, you're a property and casualty insurance agent, what would be your advice to those type of people that may be kind of on the fence and looking to get into this business, and how can our team here and how can we at Millennium help those people get started and get into this and make it a profit center for them?
I think the first thing we would need to do is go to some of these people and first, in a series of questions and good discussions, figure out if they really want to grow that side of their business.
Right.
And then if they do want to grow that side of that business, we as a company present a great opportunity because there really aren't that many wholesalers left out there like we have. What in their agency fits best? I was talking to Justin just the other day, and you think about it, and there's agencies where basically we could just be doing some term insurance, quick term. That's what their customers fit. The bigger, larger agencies, he can be the underpinning. He can take our guy out to some of his best customers, and basically our guy can stand on the relationship on his shoulders, but yet bring the expertise to sell the larger cases.
What about in the business owner marketplace? What are some of the ways they can get to some of those business owners?
You have the Connolly case, which the Supreme Court has just ruled on, which kind of puts a spotlight on buy-sell insurance. And I think that's really been kind of a neglected area. Actually, a lot of people are selling this quick term into buy-sell insurance,
right?
Which is really a big mistake because you're getting the coverage quickly, but you're not getting any of the setup. And do you really need a buy-sell, or do you really just need the liquidity for the business to be able to purchase it from the survivors of the other? I mean, if you're an expert, I think you can get out over your skis. If you're not an expert, I think you got to stay in your lane. And I think there's nothing wrong with saying, I don't know that, but we have people that do. And that's how you get educated yourself, I think.
Too many people in the industry try to act like they know too much. I may not personally know, but I will find you the answer by the end of today or end of this week. I will get the correct person on the phone and get this done.
And I think that's actually a more powerful response. The P&C agent, normally being a business person himself, he actually has a little bit of an advantage of being able to sniff that out, in my opinion, from our wholesalers, because he's had to play a lot more defense in all kinds of things and understand. So he's learned the hard way about certain things. So I think they're by nature a tad more defensive.
Right.
Because the agent has a lot to lose. Let's remember the agent, it's his customer already. There's a lot of things that are thrown out there that now, this is hot, or some people are selling this, or maybe I ought to get into this. I think it actually raises a bit of should raise, but it doesn't, a concern for them in that actually it's their customer. If we come in or they come in, they shoot themselves in the foot, they've lost a customer. So when they're talking with their people, it's not just about getting a customer. Most of the people we're trying to work with already are a customer.
Right.
So I think that's why I think it's so important to become knowledgeable about the things that matter to your customer base.
Right.
And that way I think you're much more successful. But if you're not willing to put in that time or let one of our people be the person who does it, then I think both of us need to kind of go our own ways for the betterment of all.
The people that do a good job in this space, they pick a couple topics and really specialize in that.
If you are a P&C agent and your customers see you as somebody who, at least, even if you were just selling term or whatever, is life insurance oriented, and they have business with you and they trust you, they're probably going to reach out to you when somebody else brings up something about a buy, sell, or anything else.
Right.
And if they stay in their lane and then bring somebody in to help them, just sticking and starting with one thing, whatever that may be, long-term care, disability, term insurance, I think that'll bring them more business going forward because people see them as a trustworthy resource. We're getting close to having paid $1 billion worth of death benefits.
Right.
So when you think about that, there's a lot of families out there that are a lot better off because we were involved in selling somebody a life insurance contract. I think when you've been in it that period of time and you've seen people, have untimely deaths, you've seen people have sicknesses, you've seen disabilities, you really realize how that can actually help those people. And I think it gives you a little bit different view of the industry as a whole.
Talk a little bit about the history of estate taxes and the role life insurance has played there, some of the things that are happening in the marketplace right now, and where that takes us into the future here.
Well, sure. I think that's why I think estate planning and what we do in that arena is actually a very important thing, because just since 2000, we've had estate taxes that were as high as 55% at the highest level, an exemption level of only $750,000. That exemption level is now $13.5 million. If you look back over time, that has done like this. If you die at the right time, owner of the Yankees did.
Sure.
When estate taxes were suspended. I mean, it saved hundreds of millions of dollars.
Time to go out.
But if you don't, life insurance, I would say, has turned out to be one of the great ways to really take care of estate planning for this reason. The three of us could write all these different trusts and put all this money and move it around, but the bottom line is this: somebody's got to execute that trust. So like in my case or in Matt's case, if I get hit by a bus, Dana's going to run 5 or 6 trusts. Oh, well, now we're talking about some lawyer someplace, or we're talking about Matt, or we're talking about people. Execution comes into all that stuff.
Mm-hmm. Sure.
If I get hit by a bus and Dana gets $10 million, execution's not quite as important, is it?
No, it's not.
I guarantee you that most of the people under 30 years of age spend more money on beer than they would on $1 million worth of life insurance.
Most of the people my age, my friends included, I mean, they still to this day really haven't thought about life insurance. I get the occasional like, hey, I need to get with you to get a policy, but you can hear the hollowness in their voice. They're just saying that because they haven't said that to me in a while. You know, all my friends have got kids and houses and everything now, and still not much thought put into it.
Right.
It seems like it's getting kind of pushed out later in life.
And I think life insurance can actually be somewhat freeing in that if you're in my situation, and I've got a fair amount of it, but it's also what allows Dana and I to be able to go do some of the things we want to do, because I know that even if we spend some of our money, you and the other 3 kids have a bottom line pretty good number that's going to come in because of the life insurance we bought.
Right.
I think it's great to have your investments. I certainly do myself. But I think it's also great to have a baseline that says, I know I'm going to get this. What often people don't look at is they're always good at looking at more. They're very seldom good at looking at less.
Yeah.
People can do some pretty stupid stuff when they get older. You come into this world with diapers, and a lot of times you go out with diapers. And so no reflection on myself right now, though, guys.
So, Bill, you talked about the history of Millennium a little bit. You've obviously personally been involved in some pretty affluent, higher-end customers. Talk a little bit about what you're seeing there, maybe some of your past work that you've done in that space.
One of the first things I would tell you is, having dealt with a number of billionaires, the guy who you would think doesn't need to buy insurance is buying it. What does that say to you? What they realize is it leverages money for them, just like borrowing money to buy a house does. So sometimes once you get past the guard gates, because getting to them is not easy, they actually understand insurance is an inexpensive way for them to provide liquidity for business, to provide security to banks when they're borrowing money, to provide education for grandkids. Everybody who will hear this podcast has hopefully seen like an ad for Coventry where people are buying people's life insurance policies.
Right.
Yep.
Right? Do you know who the largest buyer of life insurance policies is in this country?
Private bank.
Berkshire Hathaway.
Yeah.
The preeminent investor in this multiple generations, Warren Buffett,
Right.
is buying other people's life insurance contracts. What does that say to you about return? One of the bigger ones I did early on was for a family out of Memphis. The patriarch had invented the conveyor belt system that FedEx uses to this day to move packages. So they decided he was going to need a fair amount of life insurance. I worked with the property and casualty agents that wrote their property and casualty insurance, automobile and homeowners. We got a $32 million policy ready to be issued on him. I went down there. And so we went through it, and they said, okay, we're going to try to figure out how we got to buy it and everything else. And I said to them, and I'm sure they thought this was just some insurance guy. I don't know what I was thinking at the time, but I said, You've got a free look period here. They're willing to extend this to 30 days. You might want to just pay this
Premium.
$39,000 for 1 month.
Yeah.
You can get it back and you'll be covered. So his CPA piped up and said, oh, we don't want to do that, bum, bum, bum. And he had bought a racehorse in Arkansas, was going to run the Kentucky Derby. Mm-hmm. And the horse was kept down in Ocala, Florida. So he left that meeting on a Friday, flew to Ocala in his private plane and to check on the horse. And on Sunday morning, they were washing the horse and he was standing there and the horse got flustered and started kicking and moving. He stepped in to try to help out. Horse kicked him in the chest, separated his aorta, dead.
$39,000 looking pretty cheap at that point.
Good day for travelers because they didn't have to pay the claim, and a terrible day for his family. Well, that turned into his wife having to get a bunch of insurance, and she ended up the largest private placement insurance contract I've ever done. She paid a one-time $24 million premium for that.
Wow.
All those paid off. That family got $87 million of insurance when she died. We've done a lot of work in the higher end. We've used a lot of that Lincoln contract, for example, where we take our commissions on it over a 7-year period. What every dime you put in gets to actually go in. And I would say that makes us almost uncompetitive because I'm going to show them what they make and it's a number, no question. But what they know is, and smart people understand, if we're getting paid for 7 years, guess what?
You're
we're going to be in that game. We got skin in the game. We're in it with them. And I think that's oftentimes what insurance people don't do. They sell a contract, and that's on us. And then the person never hears from them again. It's easy to make money in this industry. It's just as simple, guys. We can make it complex, and I've done it. But at the end of the day, the person wants to know you're going to take care of them, and they feel like you're going to take care of them. And if they feel that's the case, then they're going to buy it. And if they don't, they're not.
Mm-hmm. So, you've spent over the last 26 years building a successful agency here in Millennium Brokerage Group. If you could give some tidbits of knowledge for maybe a young agent or somebody wanting to start their own agency or somebody starting out in the financial industry, what would you say to that person would be something to focus on here when they're in their younger years?
I think the first thing that you absolutely need is somebody you can ask questions of who's been there before that can help you at least give you some perspective on different things that come up. Because when you open the doors of a business, if you haven't had a lot of experience, there's all kinds of things that come up that you never even think about coming up. I had that in my own scenario. And as you all well know, I still talk to George Kukulis, who's the retired CEO of Travelers, to get perspective. I think as you build a business and you begin to hire people, you really have to look at your leadership skills and trust. The best businesses, the people who work there trust each other. I can tell you, Matt, I don't think you're carrying your weight on this, or Jason, I think you've done this well. If there's trust there, then we can discuss that. When you don't have trust between employees, if you don't trust somebody, you're not talking to them, right? You can see that in families. So a business is like an extended family. So you always have to have your eye on a trust factor with your employees. Early on, for sure, what my people knew was I was the last one out of that office. I was the one who was traveling or going places all the time. Luckily, when I had Kathy Ruskin, who's now retired, that I brought over from Aetna, Kathy and I had worked together for years, so I could trust her. So I could go do all that because she was taking care of the money. She was doing this. And if you had that trust, I didn't have to come back and look at every dime, look at every commission statement. And so that freed me up to do things. And she knew that I was going to do what I needed to do. The other thing I would tell you is, why did you start it? She and I wrote out a 2 or 3 sentence deal when we did it, which was, the reason we're doing this is so we didn't write down to make a bunch of money. Who knew if we were going to? We wrote down that we wanted to be a place where at least the people who we hired would know they could have a job for a long time. I paid her, and I didn't take a paycheck out of Millennium for 18 months. Lead people by example. And if you say you're going to do something, then you got to do it. I got that, I think, from my own dad. I remember when I was a kid, I'd say, I'll do this, Dad, I'll do that, bum, bum, bum. And of course, as a kid,
sure,
I didn't do it.
Yeah.
And he told me a long time ago, he said, Bill, promises easily made are promises easily broken. And if you keep the promises you make, you'll make a lot less of them. I've kept some promises I wish I didn't. But I think as far as people go that are working for you, They have to trust the guy or the people at the top in a small business, or else it's really hard to grow it because everybody's always got one foot out the door.
So we talked about a lot of change in the industry, in the marketplace. Obviously, we're seeing more regulation coming. One of the big areas that we're seeing a lot of stuff on right now is the annuity business and increased regulations there. And, how do we help agents position and around some of those new regulations that are coming?
Well, the regulations, specifically in annuities, for example, have really changed. They've gone from basically a suitable product. Is it a product that works for you at retirement? Well, it's a retirement, take money out, so you say it does, to a fiduciary standard, which means that what I'm selling you and what you're doing is in your best interest. That's a big hill. I do believe that a lot of our people, they are doing all those things. However, they're not memorializing it. I think the first thing that has to happen is our people have to get better about writing down, putting emails out, which shows the work we're doing. That could work to our advantage because a lot of people aren't doing what we're doing.
Sure.
Okay. The issue, just like in securities, is you have to be able to prove a fiduciary standard. What that means is that when the SEC or somebody comes in to look at Matt's annuity that I sold them, they want to look at my notes to see that here's the reasons we did this together. We have a system, there's where technology has helped us, that can keep all that.
Right.
So that if one of our guys was to be sued or had an audit or had to be looked at, we'll have it all. Because the carriers really don't care. Mm-hmm. The bad thing about this little fiduciary law is it doesn't go back up to the carrier. So the carriers can come in here and market why their product's the best in the world. And if you don't exercise due diligence and take care of it, you're the guy left holding the bag. Now, there's other regulations, the best interest in New York. There's pretty good track record for how you establish that you've done fiduciarily the right thing. You've brought up different things. You've showed it. It's not that you gave them the best product, but best interest. If I'm selling you a term policy, I think the only way that most people would adjust that, say, is that's the cheapest one.
Right.
So I think from our standpoint for our agents, what we should do on those is we should limit ourselves to fewer companies. We can only be judged by the people we represent. Mm-hmm. So we should filter out a bunch of the carriers that are a little marginal, that maybe aren't going to be as good. Concentrate on 4 companies or so that are really good and make sure we understand all the things about that. So we're doing the best we can for our agent.
And help our agents document it.
And we're not sitting here and drinking every day, so we're capable of it.
This is like a once a month occurrence.
Yeah, right.
Yeah.
Usually sober on the job.
Well, one thing, Bill, that you've stuck to here in a time when there's been a lot of changes, we still have a lot of feet on the street. Just talk about your commitment to that space, why you've stayed there versus going, call center, younger people.
I made the promise to these people when they came over from Nationwide that we would continue it in the same format that Nationwide did. Now, Nationwide didn't live up to their promise, but we've lived up to ours. Mm-hmm. There's times early on I might have been regretting it. I think it's a really good quality group of people.
One of the things I hear if we get people coming in from other BGAs that start working with us, the turnover that they see at other places is big. They may establish a good relationship with a person for, 6-8 months and then it changes. Just getting basic illustrations from places can be a bit of a challenge. I don't think there's any time we're not turning around illustration requests within at least a 24-hour period at the longest.
Which I guarantee is beating the insurance company. It does require our guys to understand that and use that to their advantage instead of just talking about product. I always think that what I do for you when times are good is not near as important as what I do for you when times are bad.
Right.
When things are tough and people are having a hard time getting something, I'm on your side. That's the guy you want to do business with. You don't want to get in the foxhole with the guy who jumps out and gets in his Bentley, right? If every time I called one of our agents or one of the guys I dealt with, all I talked to him about was, like I talked to Jack Turner the other day, who I've known for 40 years. I called Jack up. I said, how are the grandkids doing? What's going on here? Is your other grandson still in the military? Bum, 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 bum. I didn't bring up insurance at all.
Right.
I think you have to build relationships with people where they actually think you give it.
where do you get your drive to stay on top of this and continuously be a leader in this space?
The first part of this is going to sound a little crazy. I think I actually like the space. You have to grow into that a little bit, and you see what the work we does actually helps people. When I was 25 years of age, didn't even know if I wanted to do this. But I think really what I like about our industry and what I've done is I think I've always been a lifetime learner. So I like to read, I like to get better, and I think that does a couple things. It keeps you young and it keeps you being able to help people. But I have my little vices. So, it would be not unusual for me if I've had a stressful day to go upstairs after dinner for 35 or 40 minutes, turn on Call of Duty and shoot a bunch of people. Okay. Now, this is coming from a guy who's going to turn 70. And incidentally, I'm pretty good at shooting them. So the things that have helped me is I've always been able to find ways to get away from it for a short period of time that kind of can re-energize you. Surprisingly, I don't think I've ever chased commissions.
Yeah.
I think if it's just about the money, at some point you got a bunch and then you just go, okay, I'm going to go do all this crazy shit. And then you don't have a bunch again.
Right.
I'd tell any of my kids, I'd tell anybody, do what you enjoy.
One thing that I've learned from you in the last, 6 or 7 years is you've always got a unique read on what's going on in the industry. I mean, you see stuff that comes out and you kind of take it to a different level. You kind of read between the lines, behind the scenes.
I think I have a unique perspective in that I worked for one and worked up in one into a kind of an executive level. So I've seen the dark side.
Yeah.
And I've seen the light side. And what I realized is there's two kinds of people. There's people like when I was at Aetna that would talk to you like about, well, Aetna does this and Aetna does that, and we got to do this and we got to do that, and we got to cut this and we got to cut that. And they talk about Aetna or a company like it is a living being. It is a damn piece of paper in a lockbox in New York someplace.
Right.
It's about the people who work there. That's what I just think. If you're willing to go beyond, just like I told somebody yesterday when Sarah, who's trying to help us with some stuff, asked me about when I started out. Well, I think I had a great mentor. I've been very lucky. I had great parents, hardworking people, never graduated from college. And then I had a great mentor at Aetna. And when I first started calling on agencies, they gave me the 30 worst agencies in the Mid-South. Basically, they weren't doing any business.
Right.
And so he said, well, Bill, here's what you do know. They're doing some business. They're probably doing it with somebody else. You go in there and do things those other guys won't. And if need be, sell some other company stuff for them just to show them you're going to help out. So actually, the first 4 or 5 months I did this, I sold more Provident disability policies for these people than I did Aetna policies.
Right.
But guess what? The Provident guy wasn't going to do that. So pretty soon I started getting their business.
Right.
I think in some respects, I've just been smart enough to know when I heard something good and stupid enough just to keep doing it.
Yep.
Too many people do it 2 or 3 times and go, oh, I haven't made any money yet. I got to do something else.
Yep. Right.
That's how we've kept the AMA for 15 years. We got the AMA because Paul and I got called in as consultants on an idea that these people wanted to have somebody to protect them. You had Merrill Lynch, LPL, everybody in this big boardroom in Chicago. I'm brand new to the table. They looked over at me and they asked me, what do you think of this? And I said, well, to be honest, guys, I said, I got just enough money that if you offered me this deal to do it this way, I wouldn't do it. Because if this goes bad, you're the American Medical Association. Both of us are going to be on C1 of the Wall Street Journal and we're going to be ruined. We get in the elevator. Paul says to me, that might have gone better. I said, well, it's the truth. Turns out there was a lady sitting in the corner. She was the corporate counsel for him. She called me up 2 weeks later and said, I think you're the only one who told us the truth. Would you come back up here? And that's how our relationship with the AMA started. You do the right thing, it eventually comes around. Now, you do the right thing, you're going to get shafted sometimes, but you still did the right thing. That's on you, not on them.